Welcome everybody. I told you to go back to the basics. At the foundation, you have to go back to the foundation. It's not every time that you will not want to bury the pride and do the needful. Okay, I was worried. It took me a long time to actually teach how to use RSI to validate structure. This is something I was supposed to teach immediately I finished inducement, but it was difficult. Why was it difficult? It was difficult to teach it because many people will not be looking at structure again. They'll be looking for how RSI is displayed first before they go and look for structure. Instead of them to look for how the structure is doing before they validate it with RSI. It was a challenge. It took me time, but I summoned courage to do it. I've been in the business of training people for a long time, and I know how people used to do in the past. It's based on experience. You understand? So, but nevertheless, I just want to warn a lot of you, please get a structure first before you go to RSI. Don't just go that RSI straight. RSI is to confirm structure, not structure to confirm RSI. There can't be RSI without structure, okay? But there can be structure without RSI. Do you understand? But the two complement each other. Do you get the logic now? So we are going to do structure mapping today. And structure mapping is more or less like the foundation of your building. The building plan you have, the foundation of it, whatever the foundation says, is what is going to determine what the structure is going to look like. If you are a builder and you see a building plan, you'll be able to tell from the building plan how many story it can carry. When you even see the foundation, the plan for the foundation, you'll be able to say, this will carry up to 8 story, 10 story, all those things. So I sent you a note that I have prepared on structure mapping, the importance of structure mapping before this class today. The essence of that note is to enable you to understand why it is necessary for you to spend, if it will take you 1 year to spend it on it. Because it underscores the importance of the concept to technical analysis. Unfortunately and regrettably, this is what you will never hear anywhere in the market. You don't hear people talk about it. They don't care about it. You cannot understand why people fail when it comes to trading and technical analysis, and why you think many of us out of 10 forecasts will do for you as to what the market will do. 8 or 9 will follow. 8 or 9 will follow. We can show you, I say BTC will fall from where I said it will fall. You can see where it is now. BTC USD. You see where it is now. Yeah. I don't want noise, so I don't want noise.
Yeah.
Are we there now? Right here, I told you. Who is that?
Sorry.
I told you right here, BTC will fall. And can you see? It fell. It fell. Do you understand? Structure mapping. Now, what is structure mapping? What what is structure mapping? Remember, when you learn how to trade and you go to YouTube to learn structure, this is what you are going to see there. They say uptrend is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Is that not? And downtrend they say lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Is that not correct? This is very simple, and they tell us that we're going to buy right here when it make in an uptrend. When it makes a higher low, we buy. Okay, and right here higher low, we buy. Right here higher low, we buy. Right here higher low, we buy. Okay, and in a downtrend, every lower high we buy. Okay, lower high, we sell. Every lower high we sell. Every lower high we sell. Excuse me, you can see how simple and simplified this is. Can you see how simple and simplified you can get this? In fact, my grandmother, who is in the grave, if I can whisper to her, it's going to make money in this structure. It's going to make money in this structure. My mother, who is close to 70, is going to make money in this structure because it's simply straightforward. Aboki will make money. Just call them from the bush. Stop running the animal. Come and look at this structure. You say, oh God, you don't reach there. Make I sell? Yes. Don't reach low, higher low? Yes. Make I sell? Yes. You make money. It is not that simple. Okay? So, structure mapping is now the simplified process, a simplified process of making a complex structure become streamlined to make it easy. Is that okay now? You want to make a complex structure become simplified to be like this. How do I mean? The bottom line is that we want to have a system where we can underpin every bit of higher low in an uptrend. No matter how complex the system is, we want to be able to get every higher low in an uptrend. Alright? And in the downtrend market, no matter how complex the structure is, we want to find a system to streamline it and obtain every lower high in the structure. And at the end of the day, you now discover that a system or a structure that is more or less complicated for your friends and your colleagues to understand, you have used structure mapping to streamline it, to depict a model or a scenario that will make you to be able to get into every higher low in an uptrend and every lower high in a downtrend. So in other words, structure mapping is going to help you, to get into the market at the right spot. You are not going to go against the direction of the market. That is what structure mapping is to do for you. And if I now add some other ingredients to you, you will understand that in most cases, when you map your structure, no matter how complex it is, when you get your higher low in an uptrend, you are going to have mitigation there 1 to 1.5 hours of London session, or 1 to 1 and a half hours into New York session. That is when you have your mitigation, if that structure is properly mapped. And as soon as you get this mitigation, at that time, look for your entry. Look for your entry. That is how this thing is done. So now, this is the simplified model of structure that you find anywhere in the internet. But excuse me, you now come to the chart, you are going to see something like this. Bang, 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 bang. This is how you see it. Noise all about. Noise all about. Noise all about. how do you now filter this noise to obtain a structure, like this? How do you filter it? How do you recognize the one that is noise there and the one that is reality? How do you identify the one that is fake and the one that is real? This is what we accomplish with structure mapping. Structure mapping. There is no other way to do it. Unfortunately, you don't hear it anywhere. Don't hear it anywhere. Because people are still banking in the euphoria of this simplified process of structure. And market has gone so complex that the reality of the whole thing is that it does not form that form again. Why? Because of the efficiency in information management. Okay, NFP was released today, 1:30 GMT plus 1. Alright, NFP was released, and under 10 seconds, the whole world knew that employment in the US in the month of July was terribly down. Okay, and that caused USD to be battered. You can see the free fall of DXY. Why? Because information circulated, and every investors all over the world, they took positions, they took decisions concerning it. Do you understand? So because of the availability of platform where you can get information, everybody can take decision, and as a result of that, market has become more complicated. Market has become more complex, and the complexity of the market necessitates that we now develop a system as to be able to streamline it to depict a reality of simplicity. That is what we are saying. That is the essence of structure mapping. And then many people ignore it. Do you understand now? So now, what are we now to do? There are two rules. There are two rules in structure mapping. Okay? We have the rules for the bullish, and we have the opposing rule for the bearish. Okay? And these rules are just two. The first one is that what do we want to accomplish? We want to get, no matter how complex the structure is, we want to get a level that is higher low, higher low, higher low. We want to streamline it, get higher low, higher low, higher low. And for a downtrend, we want to get a lower high, lower high, lower high, lower high by simplifying a complex structure. Okay? So now we will now have a rule that you must follow in order to, let's do a bullish market first. We now have a rule that two rules that you follow to get when your lower high, your higher low is confirmed in an uptrend like this, and when your higher high is confirmed. So when you are able to get that out and you plot it, you now see that a complex scenario will become simplified. Do you get it now? So now let's just make example of the bullish market. Let's do example of the bullish market. Let's say you have your bullish market this way up. Why? Can you see? Let's say this is a structure. So, listen to me very well. You see this one that is above? It really happened. You will not find it. But the reality is that market comes in this form. And then you now see that at every point in time you are confused. You don't know where to get in. Now, the two rules are this. If you want to write, you can write. If you know it before, you don't have problem. I just want to revise it for most of us. Okay? In an uptrend, in a bullish market, every higher high is only confirmed when inducement is taken to the downside. Every higher high is only confirmed when inducement is taken to the downside. Somebody will ask me, what is inducement? Okay, look at it here. if you have break of structure here, the first pullback before the break of structure is what is called inducement. At this level, let's accept it like that. We are going to get to a level where we will say no, it's not in every scenario. When we want to analyze trend, it's not in every scenario we are going to get it like that. But for now, let's take it this way. Higher high is only confirmed when inducement is taken to the downside. Where is the inducement? Right here. Okay? When it is taken to the downside, this is when you now confirm this as higher high. Okay? And then higher low is confirmed only when there is break of structure to the upside. Where's the break of structure? Look at the structure here. Until you break it to the upside, you cannot confirm the higher low. So look at it. Look at it. Look at it. You have not broken it. You are still within the internal structure. Can you see? You are still within the internal structure. Market will be tossing you around here. Immediately you have this. You have now confirmed the lower high. You have confirmed the lower high. Because you now have the break of, a higher low. A higher low. Because you have broken structure. This is the rule. And now, if you have to do that here, look at it. You break structure here. Did you take inducement? No. No. You break structure here. Did you take inducement?
No.
If your side is not noisy, please omit yourself so that you break structure here. This inducement you take. So now that this inducement is taken, what is confirmed here?
Higher high.
This place is confirmed. Now, when will you confirm this as a higher low?
When that top is taken.
When this structure is taken. So you now have a break of structure here. Boom. Is that not?
Yes, sir.
So here, this level is confirmed as what? Higher low.
Higher low.
Correct. And now, as immediately you break structure here, you ask yourself, where is the next pullback to that break of structure? Here, this is your inducement. Is that not?
Yes, sir.
So is this inducement, is it taking?
No, sir. No.
So is this place confirmed as higher high?
No, sir.
No, sir.
Correct. Now, you have another break of structure here. Inducement has shifted from level 1 to level 2. Remember, we did a shift in inducement level. That when inducement level shift from level 1 to level 2, there will be a shift in demand level from 1 to 2 if you are in an uptrend. Is that okay now? Is that okay now? Good. Now you have a break of structure here, inducement here. Did you take it? No. So this cannot be your higher high. This is against what they taught you in a contemporary, structure in the market. It doesn't work that way. Now you have another break of structure here. You have inducement here. Is the inducement taken out?
Yes, sir.
Oh my goodness! So this becomes your higher high. This becomes your higher high. Is this your higher low?
Not yet.
Not yet. Is this your higher low now?
Not yet.
Okay, why is it that it's not yet? Why?
Because there's not been break of structure.
Yes, because there's no break of structure yet. At what point do we have the break of structure? Look at it here. Boom. It is at this point in time that you cannot confirm this level as your what? As your
higher low. Higher low.
Now, yes, and immediately you break your structure. Where is the inducement? The first pullback before the break of structure. Look at it here. Look at it here. Somebody is, please look at it here. Have you taken it?
Not yet.
So which means this spot is not your higher high. You have another break of structure. Inducement shifted from this level to this level. Okay? Now, here is your higher high. Did you take the inducement now? This inducement, did you take it now?
Yes, sir.
Correct. So this place become your what? Higher high. So have you confirmed this place now as your higher low? Because structure has not been taken. Now structure is taken here. structure is taken here, this place is now confirmed as what? As your what? As your higher low. Is that okay now? Now, look at, as you break structure here, see your inducement. Has it been taken? No. Here is not your higher high. Break of structure, inducement shifted. Has it been taken? No. Here is not your higher high. What of here? This inducement, is it taken now?
Yes, sir.
This place is now confirmed as your what? Your higher high. Now, let's assume that right here, you now have your break of structure here to the upside. Then, this place, this level will now be confirmed as your what? As your higher low. Can you see it now? So, now, let's now plot the structure. Can you see this complex structure now? We now want to plug it in a way that is supposed to be. In a way that is supposed to be. Look at it here. From this level to this level. To this level, we are going to plot every higher high to connect with the proximal higher low. Then from higher low to the proximal higher high. From higher high to proximal higher low. Can you see? Like this, like this, like this, like this, and like this. Okay, now let's change the color. Boom, let's change it to red. This is your structure. Let's remove it and bring it out. Excuse me. This is what is called market structure. This is now the market structure. Can you see all the noise that is generated by this structure from this level to this level to the upside? And when you see it as a trader, you become terrified. You become terrified. What is this? How am I going to do this? Look at your structure. Look at your structure. Okay? This is where you should buy from. This is where you should buy from. This is where you should buy from. And here is where you should buy from. This is what is called structure mapping. Are we getting the logic now? Are we getting it now?
Yes, sir.
This is what is called structure mapping. Can you see that from here, every noise has been smoothed out. Every noise has been smoothed out. And you have now brought a complex structure to the reality of simplicity that you ought to get. This is how markets will go, that will be very simple for you to understand and trade. But because it comes in this complex structure, you don't get it. You seem not to be able to figure out what's happening. But by the time you understand how to do market structure properly, structure mapping properly, you'll be able to smoothen everything and get it in form of this simple structure. This is what they teach you directly in the marketplace. But in actual sense, this complex scenario is what comes to you in reality. So market structure as a structure mapping has now, eliminate complexity and replace it with simplicity. And then you now know the exact spot to now start to get into your buy as you are doing, the buy in the market. Is that okay now? So, and I'm going to add something for you right away. So, when you do your structure mapping, alright? When you do your structure mapping, the time that mitigation is going to happen at every of your higher low in an uptrend, that time that mitigation is going to happen is going to fall into 1 to 1.5 hours into London session, or 1 to 1.5 hours into New York session, or 1 to 1.5 hours into Asia or Tokyo session. Is that okay now?
Yes, sir.
If this mitigation happen in your lower time frame, fitting your demand zone, remember that every higher low in an uptrend is a what? Is a demand zone. Every higher low in an uptrend is a demand zone. So And a demand zone is meant to be mitigated at a time that the volume is the highest. And when in the market do you discover that volume is the highest? So therefore, we have concluded with that theory that mitigation of this zone, go and do your back testing. If you don't find it that way, don't respect me again as your teacher. I'm telling you from a point of view of an authority in this field. Mitigation will happen between 1 o'clock to 2:30 in Asia or Tokyo session. That is when this mitigation will happen, and that is when you look for your entry for Asian related pairs. But if you come to London session, that is opening 8 o'clock in the morning Nigeria time, 8 o'clock GMT plus 1, you will discover that between 8 o'clock and 9:30, mitigation is going to happen in your analysis time frame. And when that mitigation happens, that is when the volume is highest, because you cannot expect JP Morgan or Barclays Bank to buy GBP USD at a time that the volume is not the highest. These are the people that create the volume. They are the one that create the volume. Is that okay now? All right. Somebody is asking what is mitigation, please. All right. Mitigation is just a process by which liquidity is grabbed at demand or supply zone. The process by which the move that has happened before is now retraced and is grabbing order at demand and supply zone. That process is called mitigation. That process is called mitigation. Do you understand now? So now, Nat has just said that within 1 to 1.5 hours of London session open, or European session open, New York session open, or Tokyo session open, that is when mitigation happens. Yes. What of when there is news? So to every rules, there are exceptions, and that is what I'm telling you. If you have a news release by 3 p.m., okay, by 3 p.m., I am telling you that mitigation you are expecting within 1 to 1.5 hours into those sessions open might not happen. That mitigation would literally wait for that news to be released for that mitigation to happen. So it is that news, that will now cause that mitigation to happen for you now to begin to look for your entry to go. The bottom line is that we are saying 1 to 1.5 hours into those sessions only because of volume, and then news itself is a news generator, it's a news creator. So if news is to happen FOMC by 7 p.m., you should expect that is when mitigation will happen. And when mitigation happens that time, that is when you take your trade. It's as simple as that. It's as simple as ABC. Is that okay now? So I am adding it to you. Apart from understanding how to map your structure, you now need to understand what happened at the point when you are mapping your structure, where you are expected higher low to be. At what time do you expect that level to be mitigated? If my higher low is mitigated at when? At 6 p.m. GMT plus 1, when there is no news release, excuse me, it's a fake level. It is a fake level. That's why I told Felix. Okay, I told Felix when gold hit a particular level, and was looking for sell in the morning, gold will of course not pay so much attention to mitigation at London, because gold will move more in New York. So if you are not getting gold mitigation at London, of what use is it for you? Because you are not going to get adequate liquidity to push it in your direction. So you don't look for entry when a pair is mitigated at a session that is off the asset. Do you understand what I'm saying now? So these are some of the things that you're supposed to understand with your structure mapping. It is not just enough to understand the structure of the market. You also need to understand the behavior of price around the level of demand and supply. Okay? And it is that behavior of price around the demand and supply that give a confirmatory evidence to the authenticity of the demand and supply zone, to the validity of demand and supply zone. Do you get the logic now? So those are the additional things I want to add to you in mapping your structure. After you have finished mapping it, these are things you take into consideration. The second thing you are going to be taking into consideration is that if you map your structure on your analysis time frame, ensure that where you are getting your higher low in a bullish market, in an uptrend, where you are getting your higher low, that level match up with a demand zone of your bias time frame. What am I saying? All right, you must be able to spot a demand zone here on where along this line. Let's say on 4 hours, H4. You must be able to spot a very beautiful demand zone with a superb imbalance at this level on H4. So by the time you map your structure and you are returning to the demand zone, and the structure you are mapping is showing the end of the internal structure, excuse me, you know that that demand zone is a reality. That's where you take your trade. Do you understand? So now let's move now to another level. You now discover that right here you have a zone here, you have a higher low here, and you have a higher high here. Okay? And you have a higher low here. Is that not? So every structure, you cannot tell me that there was no structure between this higher low and higher high. We're smoothing it out. But every structure that happened there is an internal structure. It's an internal structure. And I'm telling you today that the internal structure you see along the projection of the trend after you have moved from higher low is what you can apply trend analysis using divergence and convergence to trade. Somebody is not getting what I'm saying now. You are not getting it. You know, I taught you that you can have in trend analysis, if you have this, let's change this to white. Let's change it to white. If you have this, now you're going to have, if you have this and you have this and this, up higher high, higher high. Is that not? Higher high, higher high. Is that not? So
yes, sir.
You need inducement to be taken here before you take your trade?
No, sir.
No. So because you don't need inducement here, this kind of trading system where you deploy divergence with the use of RSI to analyze your trend, you make use of it along the direction where you have mapped your structure and you have taken and you have gotten the higher low. So along this direction right here, this is where you use this kind of system with success. Is somebody getting what I'm saying now?
Yes, sir.
This is where you use it. Yes. Yes. This is where you use it. Yes. This is where you use it. Yes. And why will you use it there? You know, I told you, don't trade internal structure. Don't trade external structure. Yes. Do not trade internal structure when you are getting this pullback. Everything you have between higher low and higher high, everything you have there is internal structure. Both the one that is going along the main structure and the one that is coming back as a pullback. But I'm telling you that the trend analysis we learn, we do, making use of divergence and convergence can only be used along the major move. Along the major move. That is where you use it. You do not use it when the market is coming back. That is another thing that you should understand. Is that okay now?
Yes, sir.
And then at what point do you think that the move along this direction is getting to an end, so that you do not look for buy again when you now begin to see a slowdown? And what is a slowdown? A divergence. convergence, you know that it's slowing down, it has to come back. Wait, do not take action. Allow this guy to come back. Map your structure. Let this low be confirmed before you look for your trade. Take the inducement. Once you take inducement along this line here, and you measure it, you are after 50, you are going to 70, 90. You know that you are done. You are done. And you are having mitigation at what? At 1 to 1.5 hours into a session open. Is that okay now? Is that okay now? Are you getting me now? So there is still one more thing I want to tell you. So for the sake of those that do not know, from this every structure, from this lower, higher low and higher high, they are the internal structure. But this main structure that we have drawn here, that we can take out from here, this main structure here, this one here, that is your external structure. And when you are trading, excuse me, trade from here, trade from here, trade from here. I don't care what anybody say. This is my edge. I don't touch the market when the market is not trending. When it's not trending, it's not my friend. I am not afraid to say it anywhere. I'm a trend following trader. When market is not trending, I don't touch it. I told you, I literally left the market this week. I'm not interested in a market that is volatile, in a market that refuses to develop structure. I am not interested. I don't want to waste my money. But when it's trending and it's behaving well, I kill it. And when I kill it, I show you that I have killed the market. I have killed the market. Yes. But I won't kill it finally. I won't bury it. I will wake it up so that I can see something to kill the next week. Is that okay?
I have a question.
Yes. You have a question. Ask your question right away.
Thank you, Mr. Anat. I'm a new person here.
All right.
I'm so glad that I came across your videos. And I've been on Elliott Way for like 4 or 5 years without any breakthrough. I was just getting your videos within a week plus. It's changed everything. Thank you so much.
Thank you.
Okay, when you talk about news like the NFP today,
yes.
Like you drew this bullish structure.
Yes.
Assuming you have done your analysis on your higher time frame and you have this.
Yes.
Can NFP come and change it completely?
Okay. Yeah, that's a good question. I will answer you in 2 ways. Number one, yes, NFP can change your structure. NFP can change your structure. Number one, and I will explain why. 2, NFP can also be in line with your structure. I will also tell you why. The bottom line is that fundamental override technical. Okay? Fundamental is number one. Don't let anybody deceive you. It is the combination of factors, geopolitical, economic, and social factor combined together in any economy that determine the value of their currency in relation with other currencies. And it is this relationship that is depicted in a technical chart that is before you. So it is the fundamental that's first happened before you can have it represented in the fundamental, in the technical. Let me come again in a way that you understand. We used to learn something in mathematics in secondary school. They call it Overheating curve. Overheating curve. I know everybody must have. I don't want to use economics. I don't want to infer to economics because not all of us study economics, but many of us study mathematics in secondary school. And when we plug that graph, we get that Overheating curve. So the question is that, what did you use to plug that curve? What did you use in order for that curve to be generated? Answer me.
You use data.
You use data that is presented to you. So that data that is presented to you is your fundamental analysis. That data is your fundamental analysis. And that graph that you have drawn in order to see the pattern and the behavior is what is called the technical analysis. So in other way around, you can use the technical analysis to understand what is happening in the realm of the fundamental, just as you can also use fundamental analysis to understand why the technical is behaving the way it is doing. So that is why if you are a technical trader, you will make money if you know how to analyze the market. If you don't know, you might not even know anything about fundamental, you will make money. Because what is happening here is what is represented here. And if you are a fundamental trader without knowing technical, you also make money. But the best that can happen to any trader is to be both fundamental and technical. You can see that we will use the fundamental news release to explain why the technical is behaving the way it's doing. So that is why fundamental can change the course of action of technical. And again, fundamental can also align with technical. There is a way you have your structure. When you go deep into it, all right, if you have your structure this way and you have it this way and you want to buy and the fundamental is positive, okay, right here you have breakout structure, right here you have all these multiple inducement, and right here you have your demand zone, okay. Even though, let's say this is GBP USD GU, even though news comes out and is positive for pounds, okay, you know it's supposed to go bullish. Pounds is not going to continue to go bullish from here. No, it's going to come first and mitigate this level. The process by which every form of liquidity is consumed and is used up in order to generate a move for the opposing direction is what is called mitigation. So when this one happens, all right, when this one happens, buy will now take place from here. Can you now see how the structural pattern that is presented to you in the form of discount price action is now aligning with the fundamental news release that is coming? And that will make this sell-off to happen first to mitigate before the buy. It's as simple as that. These are ways by which fundamental can align with technical, and it can also not align with it. So what I do is that if you notice me very well, if I analyze a news and I'm very sure of what I have done, I will wait if there is technical setup that will require mitigation. If I can get such, then mitigation will happen. As soon as mitigation happens, like this, I will buy or I will sell. So we are literally going outside structure mapping. So I think we understand it clearly. We understand it clearly now? Yes.
Yeah, I want to just, that diagram that you took down, like you brought it up, yes. That mitigation that came down, saying maybe if there was no news, you could have just continued going up straight.
No.
The buying.
No. If there is no news, the buying cannot go on straight, because there is what is called overheating in economics. You know, your car engine can overheat. Is that not? Is that not?
Yeah, yeah.
Yes, economy can also overheat. It can overheat. Yes, we call it overheating. Economy cannot be performing and be bullish all through. You know, every person in a country will be praying, let the country be witnessing a very good growth. Is that not?
Yeah.
Yeah, that is a layman way of thinking. You will experience that continuous growth and it will be injurious to your economy. You need to slow down. Okay? You need to slow down. You know, when there is massive production, massive income, what do you think will happen? When everybody has money, what will happen to prices of goods and services? There have inflation. And when there is inflation, what happens to the value of your currency? It becomes worthless. So we don't want, as economists, we don't want a situation where our economy is just performing well every year. We slow it down. We slow it down. We slow down first. So the process by which you allow that slowdown to happen, because that makes all this mitigation to happen over a period of time, 2 days, 1 week, 2 months. You cannot just allow the economy to just your currency to just be bullish. No. See, the central bank of that country will intervene. They will intervene, the currency is scarce. That's why people are looking for it, and the price is going up. No problem. They will flood the market with that currency. When they push a lot of that currency into the market, what happens? There will be excess supply over demand. And when there's excess supply over demand, what happens to price? Price will fall. Do you understand the logic now? So this is structure mapping in a bullish market. I want to believe that we can actually flip this to the other way around and depict and use the same formula to map the structure in a bearish market, so that we don't waste too much time here. So I can just go to the chart and map structure for you literally and apply what we have done. Okay?
Yes.
So somebody say, well done, sir. My major issue as challenges is when I forecast the move of a pair after mapping the pair from higher time frame, and I enter from 5 minutes or 1 minute time frame, I still lose money. Is that I need to know how long I should be in a trade and go out of it whether it hit my TP or not. My friend, the problem is that it's not enough to know structure mapping, to know this, to know that. You need a mentor who is doing it successfully and who can show you, this is how I'm doing it, this is how it should be. So if you follow that mentor who is killing it successfully and you are not killing it, you are doing something wrong. You are doing something wrong, because exactly what he has taught you is what he's doing. Exactly what he has taught you is what he's doing. Do you understand? So you can do your structure mapping. If you do your structure mapping, if you do it well, you are not supposed to lose. If you do it well. And again, there is a fundamental mistake I am discovering from what you have just said. What is that fundamental mistake? What is that fundamental mistake? You map your structure in your analysis time frame. Hello, everybody hear me well. This question he has just asked now is a blessing to many people. You map your structure in your analysis time frame. You determine where you want to trade from in your bias time frame. You see, sometimes many of you are trading, I just dey laugh. I'm laughing. But I know one day I will show you. I keep showing you. When I discover mistake, I will show you. When I discover, excuse me, if you are here, you are not in my mentorship group, you may not understand what we are talking about in that regard. Because in free group, majority of people, they are not serious. So if you do something in the free group and I see it, and I see mistake there, I will correct you. But you don't even see anybody posting anything there. Everybody is just there. But in my mentorship group, you see guys trading, posting. If they make mistake, I will tell them, guy, this is mistake. It's not supposed to be like this. That is the essence of mentorship. Some people thought that what they pay for, and it's laughable, I just laugh. They thought what they pay for in a mentorship program is the cost. It's not the cost, it's not those videos you pay for. No, it's that guidance you pay for. It is the responsibility of your mentor to guide you when you are making mistakes. It is the responsibility of your mentor to show you new direction whenever one arises. It is the responsibility of your mentor to lead the way. It's not just the course you learn, it's just the theoretical framework that will enable you to align with the opinion, the thought process of your mentor. Excuse me, if you don't learn English language, how do you flow with your English teacher? If you don't learn my course, how do you align your belief with my belief? How will the thought process not differ? That is the essence of taking my course as my student. And as soon as you are done with those courses and you have understood the theoretical framework, the next stage is how do you now apply this theoretical framework to make money? That is why you now need to now start practicing. You will make a lot of mistakes, acceptable. Everybody will make that mistake, including me. I made that mistake too. Now begin to follow. That is why I instituted Friday live session. Every Friday, there must be a live session, 5 p.m. Okay? Any week that there are good setup, I will send link every 12 p.m. 12 p.m. GMT plus 1. I will send link and give you my opinion. This is how the market is. This is what I'm expecting. If it happen like this, sell. If it happen like this, buy. That is mentorship. Mentorship is this process of giving guidance and direction. That's all. It's not the course you pay for. I laugh. Some people, after they have taken the course and they are still losing, they say, hey, this course is not good. Hey, I pity you. This course is not good. Because it's just theoretical framework. When you are done with it, you have just started work. You have just started work. I have some students who started mentorship January this year. They are done. I just told them, excuse me, you pay $2,000 to take this mentorship. You have just finished part 1. I say, I say, yes. I just taught you the theory of markets. Now you understand the theory of market. Now you understand the language of the market. When I speak, you will understand. The next phase is, how do you now use this theory to generate dollar? That is the next phase. And that next phase is not dependent on your mentor. It's dependent on yourself. Why? Because if you don't practice, if you don't send charts, how is your mentor going to know where you are making mistakes? That is the mistake that majority of you are making. You don't send charts, you don't trade, and you can see those that are sending chart and they are trading, you can see that they are getting better and better, better and better. They are killing it. The way I'm killing it, they are killing it too. Even sometimes that I don't kill it, I don't trade, they kill it. When I see it, I shake my head and I say, God, I thank you. I say, you are on the throne. That I'm having people who can use my idea to look at the market and be fearless in confronting the market and bring the reality out of a lot of complexity out of the market and kill it like this. I say, God, I thank you. But you are there, you are not showing me. You are doing your things, but you are not showing it on the group. I'll be looking at you. But the more you show it on the group, or you send it to me, the more I see it, the more I see your flaws, and I will correct you. I have a student, I think he's on the call from UK. Is he on the call? I think so. He's sending message, he will send voice note. A lot of things I will correct. I will correct. Because that is phase 2. Phase 2 of your program. Phase 2, and it depends on you, not me. The more you work, the harder you work, the easier it becomes. Because I have literally simplified the theory of the market. There is nothing that happens in the market that I don't have explanation for. Even all the Elliott wave theories and the way they have brought it, we have a simplified version of it. Because they just say this is what Mr. Elliott said. But why did it happen that way? They don't understand. We have used economics and logic. I have used economic theory and logic to streamline the whole thing and explain why they happen like that. Do we understand now? So let's proceed to our structure mapping. So is there any question based on this bullish structure and how to do it? It's just 2 rules. Once you know those 2 rules, it's over. Nothing again. And then the additional information I'm giving you this night is that immediately in a bullish market, immediately you map your structure and you are getting a higher low. Check the time. Liquidity must happen that time in your analysis time frame. And when that liquidity happens, bam, you know that this is a correct higher low. And secondly, if you go to your higher time frame like H4, okay, and you want to check that level of demand, you see that there is a level of demand there. Those are the things you should take into cognizance. Is that okay now? Is that okay now? So can we check euro dollar? Can we check euro dollar? Huh? Can we check euro dollar?
Yes, sir.
Good.
Yeah.
So when I want to analyze it, the simple thing I do is that I just go to weekly. I just want to see what is happening in the market. I just want to see what is happening. I'm not analyzing anything here, but I want to see what is happening. I want to see. Look at this. I'll say, hey, look at this. Look at this. I'll look at it. Look at it. Decelerated. That's why this one came. Took this inducement. This one's supposed to go. It can't break this top. This pullback happened. Mitigate demand. It's supposed to go. It can't break this one. So before I was expecting this to come down, take this low. It did not. It's going again. I'll just look at it. Make some discussions about it. And move. But the main thing, since I'm a confirmed day trader, confirm one, I'm not a swing trader. Not a swing trader. If I want to trade, my trade hit TP in a day. Say within 2 hours, TP hit, I don't go. Based on the way I project it. So I'm not a swing trader. Alright? So now let us map this structure from this level to this level. And we also map from this level to this level. So this one will now be an uptrend, and this one will now be what? A downtrend. Is that okay now? Agreed?
Yes, sir.
I will sleep.
Yes, sir. Yes, sir.
Yeah, let's go. So let's go to 30 minutes or 15 minutes for the analysis time frame. Which ones will we use?
30 minutes.
30 minutes. Madam, because you use 30 minutes. Don't talk 30 minutes. Sharp. Okay. Now, can you see? Let's go. So, if you take it from here, right here, it's going, it's coming. It's going, it's coming. Is it not developing inducement? Is it taking it?
No, I'm not taking it.
It's going, it's coming. It's going. How far now?
Taking.
Correct. So as it's taking here, this place become, as the inducement is taking, what is this place now?
Higher high.
Higher high. Okay? And for us to get this place as higher low, what must happen?
Break of structure.
You must break this structure here. Once you break this structure here, you confirm this place as higher low. Yeah. Somebody will ask me, by the time you are confirming this higher low, it has gone. How are you now going to take the trade here? That's the question I've been expecting people to ask for a very long time, but nobody has asked.
I was just thinking about that.
Correct. You are eligible to trade it at that level in as much as inducement has been taken. Inducement taken is a confirmation of market, catching adequate liquidity for it to move. But when this structure is now taken to the upside, when it is broken, it will now be confirmed that in this uptrend, this has become what is called a protected low. This has become a protected low. But if it has not been broken to the upside, it is not a protected low. Why is it that it's not a protected low? It is not a protected low because this market can come like this, do like this, do like this, do like this, do like this, and do like this. Excuse me, is this not still a lower high? Because it's still higher than this low. So it can still give you something like this. So that is why you cannot confirm that this is lower and higher low until it breaks structure to the upside, because it can go within the internal structure and come down again. Is it clear now? But as for trading, you can trade this level, because it has taken inducement. You can take it because it has taken inducement. Okay? So So now you have break of structure to the upside. This level is confirmed right here. Where is the?
Sorry. If you trade the way you are saying now, sir.
Yes.
So where do you put your take profit in case it's going to come down the way you said?
Where you are going to put your take profit? Hold on, my mouse is dragging. Hold on, let me change the battery. Excuse me, please. Just a second. Wow. Sorry guys, the mouse I've been noticing is been dragging. Notice the battery is gone. Right now, guys, you asked me where will you take profit, where you're going to take profit if you enter from here. Is that not your question?
Yes, sir.
All right. Are you in my mentorship program? The person who is talking, is he in my mentorship program? Okay, that's the problem.
I'm a newcomer.
Okay, that's the problem. You get to check our website, NTFX Trading.com. If you are serious about trading, if you are truly serious about trading, you go and buy the course. You go and buy the course. You learn what is Forex, all the basics, up to professional levels and fundamental analysis. 40 videos of detailed analysis of financial market. Avail yourself that course. It will do you good. That's why you are asking all these questions. All right. There is a projection of profit that is very accurate and it does not fail. Okay. You project it from your demand level. You extend your fee from demand level to the top, and where you are having your mitigation here is what we use is 0.75 to 0.9. All your 0.618 that is taught in literature is an inducement level. It does not work for us. And then at the point where you have minus 0.27 is what is called a sacrosanct level. It must hit it. And then if you are not a greedy man, then you can now project minus 0.62. Alright, so if you take this up, alright, and you get your top entry from here, stop loss right here, TP is here. First TP, if you want to extend, this is your final TP. Can you see it as hit it? It's as simple as that, guy. Do you understand it? Do you understand now?
Yes.
Correct. So let's continue with the structure mapping. Alright, so right here you have inducement here. Okay, so this market came right here. You notice that there are some pullback here. You notice? Yeah. Good. Yeah. So so this market has come down and it has taken all the inducement. So this place is confirmed as higher high. This is a higher high, and then you have break of structure here. This is your higher low confirmed. Is that correct now?
Yes, sir.
So you have break of structure, another break of structure right here. Break of structure right here. All these ones are inducement. Are they taking?
No, sir.
Correct. Now you have another break of structure right here. Break of structure, inducement right here. Okay, inducement right here. They are taking, right?
Yes, sir.
This place is confirmed as your higher high. Okay, and you now have break of structure right here. Okay, because of that, this place is confirmed as your what? As your what? Higher low. Now you have another break of structure right here. As you have break of structure here, where's your inducement? This level. Is it taking? No. Now inducement has shifted to the up here. You have break of structure here, inducement here. Is it taking? No. Break of structure, inducement here. Is it taking? Yes. Taking. So this become your what? Higher high. And then you have break of structure here. This become your what? Higher low. Is that not? So you can see we have just literally used the theory to understand it. And now let's plug all our higher high and higher low together. Let's plug it together. If you are here for the first time, you can't understand it for the first time. You need to practice it. Here, we join it here, we join it here, we join it here, we join here, we join here, we join here, we join here, and off we go. Let's change the color. Red. Boom. This is our market structure. This is what they taught you on Facebook and YouTube. You see that complex move? People all the noise, all the noise, all the noise. We have filtered everything. We have filtered everything, and we have obtained this. Okay, we have obtained this. So what this one is literally telling you is that this is where you should buy from. This is where you should buy from. This is where you should buy from. Okay, this is where you should buy from. Okay, and then what is also telling you is that everything between this level and this level is internal structure. You can only buy within the internal structure of the major move if there is convergency. That is where you apply convergency. When you have this
or divergence.
Convergency. Hey, who is saying that? What's your name? Hello?
It's a new person.
Hey, yo. Sorry, you cannot understand. We don't use divergency there. We use convergency when we want to analyze trend. Alright? When inducement does not need to be taken. That's why I say make reference to the course so that you understand it. Okay? When you have this, let's change it to white color. Okay? When you have this, you know, right here you have high here, higher high here. Right here you have high here, you have higher high here on your RSI. So when you have this situation where price and indicator, they are gravitating toward the same direction, okay, that process is what is called convergence. And when you have convergence situation in a major trend like this, after you have mapped your structure, that is where you apply it. You don't need inducement to be taken, because that is where the trend is most powerful. The trend is most powerful there. You don't need to take inducement. Okay? But when you are decelerating, when you are coming down here, no, let me go before I go there. But at this point, let me put down RSI. I told you something that time, that when you are on the major trend and you are using convergence to buy more, at what point are you not supposed to buy again? When you are now seeing a slowdown, when you are now seeing a divergence. Can you now see from here to here there is a divergence? Can you see it on the indicator?
Yeah.
Can you see that from here to here? Higher high here. Do you see higher high here? Lower high here.
Lower high.
So because that divergence has happened, you don't buy again. You don't buy again. Look at your structure here. From here to here, higher high. Look at it on the indicator from here to here, higher high. Buy more. This is convergence. Buy more.
That you buy when your indicator is down, right?
What do you mean by when your indicator is down?
When you say buy, you buy at the lower price. That's what I'm saying.
Yes, because right here you have high here, higher high here on the price. On the indicator, high here, higher high here. Can you see higher high, higher high? It's not divergence, it is convergence. So once there is convergence like that, the interpretation in trend analysis is that the move is powerfully bullish. Alright, and in that case, when there is retracement up to 75 to 90% of that move, you buy more. That's what I'm saying. Alright, so but in this case, you see from this level to this level, from this level to this level is higher high. What do you see here? Lower high. So there is divergence. You don't buy more. When this one comes, you don't buy more. Do you understand it now? So this is structure mapping in an uptrend. Can you see complex structure? We have streamlined it to know when to get involved and when not to get involved. That's the essence. So prevent losses. You know when to get involved, when not to get involved. Do you understand now, guys? Yeah. So now in a downtrend, look at it, this one is pretty straightforward. Pretty straightforward. We use this to kill the market, and I'll show you where we clear the market with it. Let's take this one out. We have spent 1 hour, right? We are going to close very soon, pretty very soon. Look at it here. Down, right? Up.
Yes, sir.
Does this break structure?
No, sir.
So, because it didn't break structure to the downside, you can't call this place inducement. All these are internal structures. They are internal structures. Down, up, down. Now you have break of structure here, you have inducement. What happened here?
Inducement taking.
Inducement taking. This is your lower high. Lower high. So, now look at it here. Right here, you have this, and you have this, okay? Who does not understand what I'm doing? The move that started from here down here is one move, because you don't have this. You don't have anyone that inducement is taking along the line. It's one move. Is somebody not getting it?
You get it, sir.
It is until right here that you have break of structure and you have inducement is taken. That's when the move is completed. That is when lower low is confirmed. Are we okay?
Yes, sir.
Yeah.
Lower low is confirmed here. Now you have break of structure here. When you have break of structure, that's when lower high is confirmed. So all these ones, they are what? Lower high. And I taught you what is called protected high. That lower high confirmed here, the market did not take it. You know why? If the market venture take this level to the upside, we are no longer bearish. That is what is called protected high. Do you see that place is protected? Do you see market take it? Do you see market take it?
No, sir.
That's what we're talking about. So now let's continue. Now you have break of structure, lower high confirmed. Right here, everything you have here, internal structure. Okay, right here, you have this internal structure. Now this one, take it. So this place become your inducement. First, pull back after before break of structure, inducement. What happened? This one come to take it.
Okay.
So this one is confirmed. Inducement is taken. Here is confirmed as lower low, and then because you have break of structure here is confirmed as what? Lower high. Okay. And right now, this lower high is a protected high. But what happened to it now? What happened to the protected high is taken. So now it's taken. So we are not talking of bearish again. We are talking of bullish market. Now let's plug in our structure. Everything you see here is this, from here to here to here to here to here to here, and market change structure. Simple. This, let's change the color. This is your structure mapping in a downtrend. Okay? And then this is your structure mapping in a downtrend. And then market has changed structure. Now, how do you know the next thing to happen? Let's remove the structure and bring it out. This is your structure. Everything you see here, this is how it is. And what happened? This is where you should sell.
Yeah, that's a good question.
Hold on. This is where you should sell. Alright? So if you bring this one, bring it here. Can you see? You should sell here. You should sell here. I sold here. I did not sell here. I wanted it to push up more. It did not. So now, what are you supposed to do next? I told you that every of your lower high will happen when? Every of your lower high where you should be selling should happen when?
1 hour to 1 hour 30 minutes into the session.
Thank you. What is this? What is this?
Mitigation.
What time is that?
2 o'clock.
2 o'clock.
Correct. What is this? Our lower high.
2:30.
No. I didn't put it well. No. Look at it. It's 3 o'clock.
3
3
o'clock.
o'clock.
Yes. You go and check. Probably there is news around 1:30 this day. Okay. What is this?
2:30.
2:30.
All right. Yeah. What is this?
2:30.
No, 3 o'clock.
3 o'clock.
3 o'clock.
3 o'clock.
3 o'clock.
Correct. What is this?
9 o'clock.
That's our higher low. Okay. You know, say I don't map the structure before I put the time for you. What is this?
2:30.
In the night. 1 to 2, 2 to 2:30. How many hours? Don't play with me. How many hours? 1.5 hours. Any mitigation that happen after 2 hours into that session open, don't listen to them. Don't listen to it. They are faking you. The real volume happen between the real mitigation happen between 1 to 1.5 hours. Maximum 2 hours if there is news. Any mitigation that happen outside that time and there is no news, forget it. It is me that say it. You have to listen. You have to wait to the next session that there is volume to now get the real mitigation. Sometimes mitigation will come and happen 3:30. Excuse me, it will flush. Oh, leave it. It's going to go back to take that level in the next New York. Said it's not back test. If it's not there, don't respect me again. I'm a learner. If it doesn't happen like that, I've just showed you this one now. I taught you this before. I didn't even know I will come and analyze it. I will come and do structure mapping for you. We can tell you by our wristwatch that this mitigation is authentic. Start buying from here. These are information and knowledge that your fake gurus will not tell you. Okay? They make use of marketing. Alright? They gather community together, make use of marketing. They make money from marketing. They don't know trading. They don't know jack. They don't know anything about this market. They don't know it. But they drive big jeep. It's money from marketing, not from trading. And they deceive people with it, and you think that that's how they make money from it. Let them come and trade. You see losses everywhere. You have to be careful the kind of mentor you follow. If you don't have the kind of technical know-how on how to do drive marketing, you can't make it big like that. Forex is not a get rich quick scheme. It's not a get rich quick scheme. Yes, I checked my statement since 2018. My withdrawal since 2018 till date. I've not withdrawn up to $200,000 guys. I think I've hit $180,000. From 2018 till date, I've not hit $200,000 because it is strictly trading minus profit. Just strictly my IC market. I've not withdrawn up to $200,000, but I have crossed 180,000. It is from trading. It's not a get rich quick. You do it, it comes small. Some month 3,000, some month 4,000, some month 2,000, some month 10,000. Because I saw the statement, some 10,000, 8,000, 6,000, just like that. This is the real market, and this is what is called structured market, which is a foundation to understanding market forecasting. Okay? So next time I'm going to come like this. I'm now going to teach you how to recognize valid demand and supply zone. That is where you will be waiting for to trade. If market doesn't get there, you chill. But when market get there, map your structure to see that you have actually gotten there. Okay, there's some other concept like fake demand, fake supply, you know, fake flag, how to recognize the formation, how to trade it, and all sort of things. It's not all I can teach here because we have people from Facebook, from free group right here. So if I'm just discussing everything here, for people that have paid for time, have paid for the course, it's as if their payment is nothing, you know. There is a limit to which I can divulge information here, but I think I've divulged enough for you guys to be able to pick up your trading from there. So I'll give like 5 minutes for you guys to ask your questions, and I will answer you. Then I will upload the content. I'm sorry, I may not. Well, I may reconsider. I'm thinking I may not drop this video on the free group if they cannot attend live session. They are not qualified to get my video. You know, but what I do is that those that participate from there, I send it to them privately. You know, do you understand? So, any question before we go?
Okay, my question. Thank you so much for all that.
Yeah.
In some of the videos I've listened to, you spoke about orthodox end, and then I wanted to say, when you said the lower low, are those the orthodox end or?
Okay, thank you very much. You have really watched Elliott Wave theory. You know, let me just give you a brief background. Some years ago, I look at the markets. I look at the market and I look at myself. I see all these guys who had come up with one strategy or the other. I look at them, honestly, without sounding immodest. You know, let me just say it's not pride. Let's leave pride out of it. I look at their profile and I see that they are not as knowledgeable as I am when it comes to financial market, understanding financial markets. Okay? Because of financial market, I have to drop engineering. I'm a first class graduate of materials engineering, materials and metallurgical engineering. I drop it and I went back to university to study economics, and I selected courses that are related to financial market, capital market, bond, monetary theory, macro, everything, and had a solid background in economics. Okay, and upon graduation, my profs, those profs were so you know, good enough to me to allow me to do my research in Forex. So you go and check profile in this country, I don't think you can find up to 3 people who have done research on Forex. We have search literature, there's no literature on Forex trading. I did it. Okay? So if I was able to carry out my research on Forex, why will I now be listening to somebody who has not done any work on Forex trading and financial market and be copying what he's doing? How can I now be applying Elliott Wave theory to trade? Elliott Wave theory that was developed in 1945. 1935. That's what I'll be relying on in 21st century. It won't work. It won't work. And I noticed a lot of fundamental flaw in the theory that is making the Elliott Wave theorists to even fail in their trading, because they see the theory but they cannot understand why those things are happening like that. And the essence of university research is to be able to answer why. So, and because I have known the how before I came in, it was now easy for me to combine that how that I know as a practicing trader and combine it with why it is happening as an economist and a researcher. Do you understand now? So after doing all these things, I have to push Elliott Wave aside, put it aside, search down, develop sound methodology based on economics and logic, and use it to understand why the market is behaving the way it's doing. And now around it, and that is what we use today. So if you have joined my free group via my YouTube, those videos are just there. They are not what we use. They are just there. And when people still message me, they still praise me, the way this work is, and they don't know that I modified knowledge, sound judgment about the market that have been instituted. When I see all this, I feel like crying. And based on that, I have to package a course around those, solid knowledge that, we have put together. So that when somebody come and say, I study a lot with theory, you can't make money with it, because the way it is subjective, and the extent of its subjectivity will deprive you from being profitable. Many of Elliott wave traders are not profitable. They are getting 1 to 3, and that 1 to 3 is to the what they will have to wait for 4 days before it will hit TP. But we are trading now with 3 pips stop loss, 3 pips, 2 pips, and it will not hit it. That is the precision we have brought to trading. That is the understanding we have brought to trading. Do you understand? So yes. you have not wasted your time studying those Elliott wave theory course, everything on YouTube. Those are things that were raining those days, 3 years ago, 4 years ago. But they have been upgraded now. I'm writing a book on modify Elliott wave theory to help those that are using Elliott wave theory to succeed, because they cannot succeed with the theory, because the man did not explain why. He did not. Just told them how. Why? It's not there. Do you understand now? So the best thing you can do is probably go and pick up the course that I put together. If you can afford it, you cannot afford it, find a way to be joining free lesson that I institute like this. Maybe you'll be getting one thing. It will only take you a longer time for you to get it. But to fast track your knowledge about it, you need to go through the course. So that when I speak, you understand what I speak. It's $300 US. It's cheap.
Wow.
$300 US. Yes, now. So if mentorship is $2,000, but the course itself is just $300, so that everybody can afford it. I just want a station where people will not be bombarding me with message. This, and go and take the course. If you take it, you can now automatically join my mentorship group. Okay? That's just how it is. But to mentor you, to be teaching you one-on-one, that opportunity will not be there. That one is for those that pay for mentorship, $2,000 US. I have session with them every weekend. Okay? So that's how it is, brother. So you have not wasted your time by going to Elliott wave theory. If you did not go through it, you will not discover me here today. Is that okay now? Is that okay? Correct. Any other question? So that we'll go. Any other question? So I'm going to send the recording to you guys to study. So it's been a nice time being with you today. We have literally spent 1.5 hours, and I think we have gained 1 or 2 things from here, and I believe we'll make use of what we have gained to better our trading. I want to see you kill the market. I saw Felix literally kill the market today, and I hope you've made like $2,000-3,000 on your good. I so much respect your perseverance as to try to see how we judge the bearish nature of gold, and you follow it through and you kill the market. Congratulations to you, Felix, and any other person that took the sell on gold. So I'll see you next week, guys.